Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 14th, 2025, and we're diving into Sanara MedTech's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sanara MedTech, a company focused on medical technology for surgical and wound care markets, has just released its Q1 2025 financial results. Let's delve into the details.
Revenue and profitability overview. Let's start with the top line. Sanara MedTech reported a net revenue of $23.4 million for the first quarter of 2025, which is a 26% increase compared to last year. John, can you shed some light on this?
Absolutely. The revenue growth was primarily driven by a 28% increase in sales of soft tissue repair products, notably the Celerate RX surgical activated collagen. This was complemented by an 18% rise in bone fusion product sales. The company's gross margin also improved to 92%, up from 90% last year, indicating effective cost management and increased sales of higher margin products.
However, the company reported a net loss of $3.5 million. What factors contributed to this?
The net loss was largely due to increased operating expenses, which rose by 30% year over year. This includes a significant rise in selling, general, and administrative expenses, as well as research and development costs. Despite the loss, the company achieved an adjusted EBITDA of $0.7 million, showing some operational efficiency improvements.
Strategic initiatives and leadership changes. Sanara MedTech has been active on the strategic front as well. Can you tell us about their recent initiatives?
Indeed. Sanara entered into an exclusive license and distribution agreement with Biomimetic Innovations, acquiring U.S. rights to their O-Stick synthetic injectable structural bioadhesive bone void filler. This move is expected to enhance their product offerings significantly. Additionally, they expanded their leadership team by appointing Elizabeth Taylor as the new CFO, which could bring fresh perspectives to their financial strategies.
They also made some financial maneuvers with their term loan. What does this entail?
Sanara amended their term loan agreement with CRG Servicing LLC, allowing for additional borrowings. They borrowed $12.25 million, which will be used for acquisition opportunities and general corporate purposes. This financial flexibility could support their growth initiatives moving forward.
EPS forecast and analyst expectations. Let's discuss the earnings per share. Analysts had forecasted an EPS of 31 cents. How did Sanara's actual performance compare?
Sanara reported an EPS of 41 cents, missing the forecast by 10 cents. This miss can be attributed to the higher-than-expected operating expenses and interest costs. With only one analyst covering the stock, the forecast might not fully capture the company's financial dynamics.
What does this mean for investors?
While the EPS miss is a concern, the company's strong revenue growth and strategic initiatives could offset some of the negative sentiment. Investors should keep an eye on how these initiatives translate into future profitability.
Operational efficiencies and future outlook. John, let's talk about Sanara's operational efficiencies and future outlook. What stands out to you?
Sanara's adjusted EBITDA improved to $0.7 million, indicating better operational efficiencies despite the net loss. They have a solid cash position of $20.7 million, which provides a buffer for future investments. However, their debt has increased to $42.8 million, which is something to monitor.
What are the company's plans moving forward?
Sanara is focused on driving revenue growth and improving profitability, particularly in their Sanara Surgical segment. They are also preparing to launch a pilot program for their Tissue Health Plus platform, which could open new revenue streams. The company's strategic initiatives and leadership changes are aimed at capitalizing on the large market opportunities ahead.
Key takeaways. To wrap up, Sanara MedTech has shown impressive revenue growth and strategic initiatives despite a net loss this quarter. Their focus on operational efficiencies and future growth prospects remains strong. John, any final thoughts?
Sanara's commitment to expanding their product offerings and improving operational efficiencies is promising. While the EPS miss is a concern, their strategic direction and market opportunities could provide long-term value for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Sanara MedTech's performance in the comments below.